Welcome back. The governor of the Central Bank of Nigeria has unveiled the bank's monetary policy framework for the next 5 years of his second term in office. In the past 5 years, the financial regulator has focused his monetary actions on price stability and exchange rate management, including strategic interventions in sectors like textile, agriculture, and small and medium enterprises.
Nigeria remains committed to a free trade regime that is mutually beneficial, but particularly aimed at supporting our domestic industries and creating jobs on a mass scale for Nigerians. We intend to aggressively implement our 500 billion facility aimed at supporting the growth of our non-oil exports, which would help to improve non-oil export earnings. We would launch a trade monitoring system, TRMS, in October 2019, which is an automated system that will reduce the length of time required to process export documents from 1 week to 1 day. This measure will help support our efforts at improving our non-oil exports of goods and services. We will also work with our counterparts in the fiscal arm in supporting improved foreign direct investment flows to various sectors such as agri, manufacturing, insurance, and infrastructure. These measures, while supporting improved inflows into the country, will help to stabilize our exchange rate and build our external reserves. On financial system stability, a resilient and stable financial system is imperative for continued growth of our economy, given the intermediation role that financial institutions play in supporting the needs of individuals and businesses. As a result, we will continue to improve our on-site and off-site supervision of all financial institutions while leveraging on data analytics and our in-house experts across different sectors to improve our ability to identify potential risks to the financial system as well as risks to individual banks. In the next 5 years, we intend to pursue a program of recapitalizing the Nigerian banking industry so as to position Nigerian banks among the top 500 in the world. Banks will therefore be required to maintain a higher level of capital as well as liquid assets in order to reduce the impact of an economic crisis on the financial system. With the rise in digital payments and cyber security threats, we will develop a robust mechanism that will help ensure that the necessary safeguards are put in place by banks and financial institutions to protect against loss of data, fraud, and cyber incursions in their respective systems. A robust payment system infrastructure. An efficient payment system is vital to the effectiveness of monetary policy interventions. It also helps in reducing the cost involved in payment for goods and services. The Payment Services Management Department in the CBN will work to enable the build-up of a robust and secure payments infrastructure in Nigeria that is reliable and easy to access. We will reinvigorate our efforts at driving cashless initiative across the country due to immense efficiency gains that will be derived from it and the impact it could have on our financial inclusion drive. Given Nigeria's large size and the cost involved in building bank branches across the country, the Payment System Department would support the spread and utilization of digital modes of transactions so that every Nigerian will have access to financial services. A strong emphasis will also be placed on improving speed and efficiency of payment channels while working to ensure that digital channels are safe and secure. This will help to build confidence in our nation's payment system. In order to improve utilization rate, we will continue to ensure that payment channels are interoperable, which will enable individuals with digital devices to transact across different banks or payment modes. Through measures such as the Cashless Initiative, the USSD, mobile banking, agent network, and payment services banks, Nigerians can expect to see significant improvement in the payment system infrastructure in Nigeria over the next 5 years. We will also work with the Nigerian interbank system, banks, and fintechs in developing a regulatory sandbox. This sandbox will enable us to test financial innovations by fintechs and banks in a controlled environment in order to assess its impact on the growth and safety of financial system. Targeted development finance. Building on the success of our Anchor Borrowers program and other intervention programs geared towards supporting the growth of our agriculture and manufacturing sectors, and in keeping with the recent presidential directive, we intend to boost productivity of growth through the provision of improved seedlings and fertilizer, as well as access to finance for rural farmers in the agricultural sector across 10 different commodities, namely rice, maize, cassava, cocoa, tomato, cotton and textile, oil palm, poultry, fish, and livestock and dairy. Our choice of these 10 crops is driven by the amount spent on importation of these items into the country and the over 10 million jobs that could be created over the next 5 years if efforts are made to expand cultivation and processing of these items in Nigeria.
Nigeria's Central Bank Governor Godwin Emefiele. In other stories now, Vodacom Group has reached an agreement with the Congolese government to end a standoff over the suspension of its 2G telecoms license. The Congolese Telecommunications Ministry suspended the license in April, saying Vodacom Congo had not followed correct procedure when it paid $16 million to renew it in 2015. Vodacom has been negotiating with the authorities after losing the chance to challenge the suspension for 3 months as a result of a court ruling on Monday. The Telecoms Ministry says Vodacom has committed to comply with the demands of the state. The ministry previously announced that the cost of renewing the license would cost $65 million. The suspension, however, has not affected Vodacom Congo's 3G or 4G licenses in the country. The African Export-Import Bank has approved a $69 million dividend payout to its shareholders from its 2018 earnings. The approval came during the FREXIM's annual general meeting in Moscow, where the president of the bank, Benedict Arama, mentioned that total revenue rose by 24% in 2018 to $806 million, while the net income increased to $276 million. The bank's total assets, including contingent liabilities, went up by 15% from $13 billion in 2017 to $15 billion in 2018, with profit performance reflecting strong growth in interest and fee income from diversified sources by geography and financial products. The shareholders also appointed one new member to its board of directors and retained Dr. Rama as chairman for 1 more year. And oil prices were higher in early trade today as tensions remain high between Iran and the United States, with the U.S. Secretary of State Mike Pompeo saying significant sanctions on Tehran will be announced. Brent futures were up at $64.97 a barrel, while U.S. crude was up at $58.15 a barrel. And that's our show today. Thank you for watching. I'm Bisi Adebayo.